Imagine a bank vault. Inside that vault, there is one single bar of silver. Standing outside the heavy steel doors are 500 people. Every single one of them holds a piece of paper, a valid receipt, claiming that specific bar of silver belongs to them. As long as they stay outside, happy with their piece of paper, the system works. Everyone feels rich. Everyone is calm. But what happens on the day they all decide they want to hold the metal in their hands? What happens when 500 people try to squeeze through the door to grab one bar? This isn't a hypothetical story. This is the modern silver market, and standing at the gate, holding the keys, is J.P. Morgan. For decades, whispers of manipulation, massive short positions, and price suppression have swirled around this banking giant. But we are approaching a mathematical breaking point. Industrial demand is exploding. Mines are running dry, and the paper leverage is higher than ever. So what actually happens when the music stops? What happens to your portfolio, the global economy, and the price of everything you own when J.P. Morgan faces a true silver shortage? The answer is terrifying, and it's going to change the financial world overnight. To understand the explosion, we first have to understand the fuse. Most people think the price of silver is determined by how much metal comes out of the ground versus how many people want to buy rings or coins. That is adorable, but it is completely wrong. The price is determined on the COMEX, a futures exchange. This is a casino where bankers trade contracts promising to deliver silver in the future. Here is the catch. Almost no one takes delivery. It is a game of hot potato. They trade the contracts back and forth, betting on the price direction, settling in cash. Because they settle in cash, they don't actually need the silver. This allows banks to sell silver they do not have. This is called naked shorting. It is the equivalent of me selling you a house I don't own, betting that the housing market will crash so I can buy it cheaper later before I have to hand you the keys. J.P. Morgan inherited a massive short position in silver when they bailed out Bear Stearns in 2008. The government practically begged them to take it to save the system. Since then, they have been the whale, the dominant force. But recently, the tides have shifted. We are seeing a divergence that hasn't happened in history. The price of paper silver is being pushed down, while the demand for physical silver is ripping through the roof. If you have ever felt like the markets are rigged against the little guy, or if you suspect that the prices on your screen don't reflect reality, go ahead and hit that like button. It helps us get this information out to more people who need to wake up. Now, let's look at the supply shock. Silver isn't just money. It isn't just a hedge against inflation like gold. Silver is a strategic industrial metal. You cannot build a Tomahawk missile without silver. You cannot build a solar panel without silver. You cannot build an electric vehicle or a smartphone without silver. It is the most conductive metal on Earth. Here is the problem. We are trying to transition the entire world to green energy. Governments are mandating solar panels and EVs. This requires billions of ounces of silver. But the mines, they are empty. We haven't found a major new silver deposit in over a decade. Ore grades are falling. It takes 10 years to bring a new mine online. So we have an immovable object meeting an unstoppable force. On one side, J.P. Morgan and the bullion banks managing the paper price. On the other side, Apple, Tesla, Samsung, and Raytheon, who need physical metal to exist. When push comes to shove, Apple doesn't care about the paper price. They need the metal. If they can't get it, their factories stop. Their stock crashes. They will pay any price. This is where the shortage begins. Let's play out the scenario. Day 0. Reports start circulating that the COMEX inventories are critically low. We are already seeing this. Registered silver, the stuff ready to be delivered, has plummeted to historic lows. But on day 0, a major industrial buyer, let's say a massive tech company, requests delivery of 50 million ounces. The vault managers check the inventory. It's not there. Usually, in this situation, the banks would call around. They would lease silver from London. They would borrow it from ETFs. But in our scenario, the market is tight. There is no silver to borrow. News leaks. J.P. Morgan fails to deliver. In the financial world, those 5 words are a nuclear bomb. Trust is the only currency that matters. If a bank cannot honor its contract, the contract is worthless. Day 1 of the crisis. The price of silver on the spot market disconnects from the futures market. You look at your screen, and it says silver is $25. You call your local dealer to buy a coin, and they laugh at you. They say, "I'll sell it to you for $100, take it or leave it." This is called backwardation on steroids. The spot price, the price for immediate delivery, skyrockets above the future price. The paper market becomes irrelevant. This creates a panic loop. Investors who hold paper silver, like the SLV ETF, start to get nervous. They read the prospectus. They realize that they don't actually own silver. They own a share in a trust that claims to own silver, but the fine print says the custodian, often J.P. Morgan, can substitute cash if the metal isn't available. So, millions of investors rush to sell their paper silver to buy physical metal. But remember, the physical metal is gone. Day 3. The short squeeze. J.P. Morgan and other banks holding short positions are now bleeding billions of dollars an hour. As the price rips higher, $50, $75, $100 an ounce, their margin calls explode. They have to put up more cash to cover their bad bets. Usually they would short more paper to drive the price down. But the market has woken up. No one is selling, everyone is buying. The banks are forced to cover. To cover a short, you have to buy. This is the exact mechanic that happened with GameStop, but imagine it on a global scale with a strategic commodity. The banks are forced to buy back their shorts at any price, driving the price vertical. If you are enjoying this breakdown and want to stay ahead of the next financial storm, make sure you are subscribed. We dive deep into the stories the mainstream news is too scared to touch. Now, things get dark. Day 7. The COMEX declares force majeure. This is a legal clause that basically says, due to unforeseen circumstances, we cannot fulfill our contracts. They will settle all outstanding contracts in cash at a fixed price. Imagine you bought a contract for silver to protect your wealth. The price is skyrocketing to $500 an ounce in the real world, but the exchange sends you a check for $30 an ounce and closes your account. This is the great wealth transfer. The average person holding paper assets gets liquidated for pennies. The insiders and those who held physical metal hold the only asset that matters. But here is the plot twist that very few people talk about. And this is where J.P. Morgan might not be the victim, but the ultimate winner. For the last 10 years, while everyone was accusing J.P. Morgan of suppressing the price, they were also the biggest buyer of physical silver on the planet. They have amassed a stockpile that rivals the U.S. government. Why would they do that? Why short the paper market but buy the physical? Because they know the system is going to break. They are suppressing the price to buy it cheap. When the shortage hits, they flip the switch. They are no longer the short seller. They are the owner of the world's largest stockpile of the most valuable strategic asset on Earth. They let the price run. They let it go to $500, $1,000. They settle their paper shorts with worthless printed money, and they revalue their physical vault holdings to trillions. It is the ultimate bait and switch. So, what does this look like for you? What happens to the economy? First, electronics prices skyrocket. If silver goes up 10 or 20 times, the cost of iPhones, solar panels, and EVs goes up. Inflation isn't just about money printing anymore. It's about resource scarcity. Second, a currency crisis. Silver and gold are the canaries in the coal mine for the US dollar. If silver breaks free from the paper manipulation, it signals that the market has lost faith in the dollar. It exposes that the emperor has no clothes. This could trigger a rush out of fiat currency and into hard assets. We saw a preview of this in 1980 with the Hunt brothers. Two billionaires tried to corner the silver market. The price went from $6 to $50 in a matter of months. People were lining up around the block to sell their grandmother's tea sets. But the government stepped in. They changed the rules. They raised margin requirements. They forced the Hunt brothers into bankruptcy. The difference today is that the Hunt brothers aren't two guys from Texas. The buyers today are China, Russia, and India. They are sovereign nations accumulating metal to back their currencies. The U.S. government cannot simply change the rules on China. If you own physical silver, this scenario sounds like a dream. Your net worth explodes. But we have to be realistic about the chaos that comes with it. A silver shortage stops supply chains. If Tesla cannot get silver, they lay off workers. If solar companies cannot get silver, the energy transition halts. The stock market, which is heavily weighted in tech, could crash as production lines freeze. We are talking about a systemic seizure of the global economy. There is another layer to this. The unallocated accounts. Many people invest in silver through banks where they hold unallocated metal. This means you have a claim on a pool of silver, not specific bars. In a shortage, unallocated accounts are unsecured creditors. You are last in line. When the vault is empty, you don't get silver. You get a sorry letter, and maybe, years later, a fraction of your initial investment in depreciated currency. This is why the phrase, "if you don't hold it, you don't own it," is the mantra of the silver community. Let's look at the signs that this is happening right now. Last year, the Silver Institute reported the largest supply deficit on record. Demand outstripped supply by hundreds of millions of ounces. How did the price not explode? Because the existing above-ground stockpiles filled the gap. But those stockpiles are finite. London vaults are bleeding. COMEX vaults are bleeding. We are burning the furniture to keep the house warm. JP Morgan knows this. The central banks know this. So why the silence? Because keeping the price low keeps the illusion of a strong dollar. If gold and silver skyrocket, it is a report card that says the central bankers have failed. They will fight it until the very last ounce is gone. But math always wins eventually. You cannot print silver. You cannot quantitative ease a new mine into existence. When the shortage becomes public, it will happen overnight. It won't be a slow climb. It will be a gap up. The market will close on Friday at $25 and open on Monday at bid no offer. Meaning there are buyers, but absolutely zero sellers. The panic buying from the public will act as fuel on the fire. When people realize their currency is losing value and the banks are insolvent, they rush to safety. Silver is the poor man's gold. It is accessible. Imagine a world where a 1-ounce silver coin buys you a month of groceries. That is the historical norm. In Roman times, a day's labor was a silver denarius. Today, a day's labor for a minimum wage worker buys maybe 2 ounces? We are historically undervalued. The correction, when it comes, will be violent. Now, I want to hear from you. Do you think the suppression can last another decade, or are we on the brink of the squeeze? Let me know in the comments below. It's always interesting to see how many of you are watching the physical inventories. Let's revisit the villain of our story, JP Morgan. If they are indeed long physical and short paper, they are positioned to become the masters of the new economy. They could effectively corner the market for green energy. If they control the silver, they control who gets to build solar panels. They control who gets to build missiles. This moves silver from an economic asset to a national security asset. In the event of a total shortage, don't be surprised if the government steps in. Executive Order 6102 in 1933 confiscated gold from U.S. citizens. Could they do it with silver? It is harder. Silver is bulky. It's everywhere. It's in your drawers, your electronics, your change jar. Confiscation is a logistical nightmare. But they could impose a windfall profit tax. They could fix the price. They could make it illegal to trade silver outside of government-approved channels. This is why the shortage scenario isn't just about getting rich. It's about freedom. It's about transacting outside of a failing digital system. As we move towards central bank digital currencies, CBDCs, the control over your money becomes absolute. They can turn off your ability to buy. They can track every penny. Physical silver is the antidote to CBDCs. It is private. It is untrackable. It works when the power goes out. The shortage of silver represents the breaking of the control grid. That is why they fight it so hard. That is why the algorithms slam the price down every morning at 8 a.m. New York time. They are trying to demoralize you. They want you to sell. But every ounce you take out of the vault is a vote against their system. So, let's summarize the end game. The inventories hit zero. The industrial users panic and buy directly from miners, bypassing the COMEX. The COMEX becomes a ghost town, a betting parlor with no product. The price disconnects. The media will call it market manipulation by Reddit traders or foreign adversaries. They will blame everyone but the banks. But you will know the truth. You will know it was simple supply and demand, suppressed for decades by paper leverage, finally snapping back to reality. The wealth transfer will be one of the largest in history. Trillions of dollars moving from paper assets, bonds, stocks, currency, into real assets. If you are holding paper, you are the yield. If you are holding metal, you are the bank. The question is not if this will happen. The math says it must. The question is simply when. And judging by the draining vaults and the geopolitical tension, the clock is ticking louder than ever. JP Morgan is ready. Are you? This financial game of musical chairs is coming to an end. The music is slowing down. There is one chair left, and the person sitting in it is holding silver. If you found value in this deep dive, share this video. The algorithm hates this topic, so it's up to you to spread the word. And if you think the silver shortage is scary, wait until you see what is happening in the bond market. It makes the silver squeeze look like a tea party. Click the video on your screen right now to understand why the bond market collapse is the real endgame for the global economy. You do not want to miss this. I'll see you there.